Welcome to the last edition of Business right here on PM News. The Reserve Bank announces its interest rate decision tomorrow. The market expects a rate hike. The repo rate, the rate at which the Reserve Bank lends to commercial banks, is currently 5.5%.
Accelerating inflation is the main concern, although it's caused mainly by external factors. The last reported CPI level for May stood at 6.6%, way higher than the bank's 6% ceiling. Already there are signs that petrol prices will rise further next month, which will have inflationary impacts. And that's despite the fact that the international oil price has come down in recent days.
We think 25 basis points is the most likely outcome in terms of an increase at tomorrow's meeting. The main reason is that South Africa's got a large current account deficit. That current account deficit is keeping the rand weak. The weak rand, in turn, is the bulk of the reason behind South Africa's high inflation rate at the moment. And to the extent that the South African Reserve Bank does not respond to this high inflation rate, it may start to have secondary round impacts and may start to dislodge inflation expectations. So we think that the SARB needs to respond to that.
Yesterday, the rand weakened to over 10.70 against the dollar compared to 10.64 the previous day. The ongoing strike in the metal and engineering sector, together with the comments made by Federal Reserve Chairwoman Janet Yellen, put pressure on the currency.
I think what the market didn't expect was her to be a little bit more hawkish in terms of how soon they may in fact start consider interest rate hikes, which unfortunately put the rand on the back foot.
The Reserve Bank is in a quandary as current growth levels are weak, while inflation is getting out of hand. And with countries like the US potentially lifting rates sooner rather than later, investors may be more attracted in investing in those bond markets relative to emerging markets like South Africa. Many analysts say the bank has to hike as its primary function is to keep inflation in check.
For the first time in many previous cycles, GDP growth is a lot weaker when inflation's high. And off that basis, you might want to go slowly in small increments of 25 basis points to do whatever you can not to hurt GDP too much, but still send a very strong signal out there that you have credibility as the Reserve Bank to tackle inflation.
The fear is if the Reserve Bank does nothing in the face of inflation heading towards 7%, the perception will be that it doesn't care, which could lead to a sell-off in the rand, which would ultimately lead to inflation spiralling out of control. Nomphumelelo Siziba, SABC News, Johannesburg.